AMD just launched the chip that could make it Nvidia's biggest rival in the AI race. But here's what almost nobody's talking about. The stock that could benefit the most from this launch might not be AMD at all. I'm Alex Carter. Welcome back to Wealth Signal. Quick reminder before we get into it. Everything you hear today is for education, not personalized financial advice. Always do your own research before you put a single dollar to work. AMD's new product line just started shipping this quarter, and if you're only watching AMD's stock price, you could be missing the bigger opportunity sitting right next to it. I went through this entire product launch and mapped out exactly which companies are structurally tied to AMD's success. Not just guessing, but tracing the actual supply chain. If you're serious about catching stories like this before they're obvious to everyone else, hit subscribe right now. This channel is built exactly for that. Today we're covering 4 companies riding AMD's launch: manufacturing, connectivity, networking, and one that's so central to this story its stock might end up being the biggest winner of all 4. I'll tell you exactly which one at the end. This isn't AMD's story alone. Look at Nvidia. Nvidia doesn't make its own chips. That's Taiwan Semiconductor. It doesn't package them. That's other specialized partners. It doesn't build the fiber connections linking racks together. That's a whole supporting cast most investors never think about. AMD is walking that exact same playbook right now, and the companies running quietly behind it might be where the real early opportunity is. Let's start with AMD itself. The stock is up over 172% in the past year, up 125% just since January. Your gut reaction might be, "I already missed this one." I'd push back on that. AMD isn't just a chip company chasing Nvidia's leftovers anymore. It's transforming into a full AI infrastructure provider. GPUs, the racks, the software stack, all of it. That's a completely different business than it was 2 years ago. The launch centers on 2 things: the MI450 chip and the Helios rack-scale system, the technology that lets AMD deliver AI supercomputers at the scale hyperscalers actually need. Analyst price targets mostly sit in the $500 to $600 range, with the stock trading close to that already. But some targets go well past $1,000, and even the conservative consensus still points to more room to run. Here's the part most people miss. Nvidia built its lead on model training, the phase where AI systems actually learn. AMD's chips are better suited for inference, the phase where those trained models are put to work, answering questions and generating results. And the inference market is expected to be more than double the size of the training market. That's the real prize AMD is chasing. Here's what concerns me, though. A lot of analysts have paused in a wait-and-see mode over the past month or 2. The expectations are massive, but the products need to actually ship and start converting into real revenue before that high end of the price range gets confirmed. Consider this. Back in April 2025, right after the tariff shock hit markets, AMD was trading around $80, and everyone called it a falling knife, a stock nobody should touch. It's now trading close to $500. Anyone who held through that fear captured one of the biggest moves of the past 2 years. At today's price, this isn't a screaming bargain, but it's also not a stock where the story is already over. If Helios ships on schedule and the revenue actually starts flowing this quarter, there's a real case for AMD to keep climbing. But AMD can't do this alone. It needs a company to actually build and ship those Helios racks at scale. And that company might be flying completely under your radar. Hewlett Packard Enterprise, ticker HPE, is the company actually manufacturing the Helios racks. AMD designs the architecture and the chips, but it doesn't have the global manufacturing footprint to physically build and deliver these systems at scale. HPE does. Most people still picture HPE as an old-school printer and server company. That perception is badly out of date. It's become the original equipment manufacturer standing between AMD's chip designs and the data centers that actually run them. The chart tells the story. HPE stock is up 160% over the past year, remarkable growth, and it's still trading behind the analyst consensus price target. It spiked near $65 earlier this year, pulled back, formed what looks like a bullish consolidation pattern, and has now broken out of it. The stock's biggest jump actually came around earnings, when results came in far stronger than expected. That's what pushed analysts to start forecasting a hyper-growth pace for the next 2 to 3 years. And even that pace might still be conservative, given how much backlog AMD's launch could generate for HPE. Here's what I'd flag as a risk. This entire thesis depends on execution and timing. Any delay in delivering these racks shows up directly in the stock price. This isn't a company where you can afford patience with missed deadlines. Imagine you're an investor who added HPE to your watch list a year ago without knowing any of this AMD story was coming. You'd be sitting on a 160% gain right now, and the next leg of growth might still be ahead, tied directly to whether Helios ships on time. HPE builds the racks, but racks alone don't connect anything. The individual GPUs and servers still need to talk to each other at incredible speed. That's a completely different company's job. Astera Labs is a company most casual investors have never heard of. But here's the thing. It was built years before this AI boom specifically around one bet: that connecting AI chips together would eventually matter as much as the chips themselves. That bet is paying off right now. Astera Labs plays in 2 critical layers: scale-up, which connects individual GPUs into larger servers, and scale-out, which connects entire rooms of racks into one massive supercomputer. It does this through signal retimers, hardware that keeps data moving cleanly and at full speed through optical cables, so nothing gets lost or delayed on the way. Astera Labs is also a founding member of the UALink consortium, an open standard alliance with AMD, Broadcom, and HPE among others, aiming to keep AI infrastructure from getting locked into a single vendor. The stock spiked heading into the summer, pulled back with the broader AI sector, and is now testing support around the $280 region. The technical picture backs that up. The chart shows a strong momentum indicator converging with the stock's recent highs, a signal that those highs are likely to be tested again and possibly broken if AMD's product sales come in as expected. Here's what concerns me. Analyst price targets on this one range from below $300 all the way up to $500, one of the widest gaps we've seen across this entire ecosystem. That gap tells you analysts genuinely disagree on how big this opportunity gets, not just on the timing. At current levels, near that support zone, this looks like a reasonable spot to watch closely. Not a guaranteed win, but a company sitting exactly where the AI infrastructure story needs it to be. So far, we've covered the chip, the manufacturer, and the connectivity layer. There's one more piece. The company that's been quietly part of this ecosystem the longest, and the one most investors already recognize. For years, individual GPUs sat in servers as isolated components, each one powerful on its own, but disconnected from everything around it. Then the industry realized raw chip power meant nothing if those chips couldn't talk to each other at full speed. That single insight built Broadcom's entire role in this story. Broadcom builds the scale-up switches, the components that let individual GPUs connect into servers, and servers connect into full racks. Without them, AMD's chips would just be powerful parts sitting in isolation, unable to work together as one system. Broadcom has been embedded in this project since the design phase, working directly alongside HPE. The stock is up about 25% for the year, but has been genuinely volatile. It hit a peak a few months back, pulled back hard, and is now rebuilding support at a higher level than it held in the spring. Here's the honest concern with Broadcom compared to the others on this list. It's already a massive, well-known company. That means the AI story is a smaller slice of its overall business. So even a huge win for AMD's ecosystem moves this stock less dramatically than it would move a smaller, more concentrated name like Astera Labs. This one is less about explosive upside and more about stability with a real AI kicker attached. If you want exposure to this ecosystem without the volatility of a smaller name, this is where a lot of investors land. If you're finding value in breaking down an ecosystem like this instead of just chasing one hot ticker, smash that like button. It genuinely helps this channel reach more people looking for this exact kind of analysis. Before I rank these, drop a comment and tell me, which one of these four would you have picked as the biggest winner before watching this video? Before we move on, everything I've referenced visually in this video is saved as a downloadable summary file in our Wealth Signal Telegram channel, along with every past and future videos file. Links in the description. Go grab it. So here's my ranking, starting from the weakest case and building up. 4th place, Broadcom. Solid, real exposure, but already a giant. This launch is a smaller multiplier for a company this size. 3rd place, Astera Labs. The connectivity story is real, and the technical setup looks strong. But that wide analyst disagreement, anywhere from under $300 to $500, tells me there's real uncertainty about how big this actually gets. 2nd place, Hewlett Packard Enterprise. Already up 160% and still trading behind consensus, with the direct manufacturing role that puts it closest to the actual revenue as Helios ships. The risk is pure execution. Any delay hits this stock hardest of all four. And, in 1st place, the one I opened this video with, AMD itself. It's the chip, it's the platform, it's the reason all 3 other companies exist in this story at all. If Helios ships and the inference market plays out the way it's expected to, AMD isn't just the trigger for this ecosystem, it's still the stock with the most room to run. Here's the bigger lesson in all of this. The most obvious stock in a story is rarely the only stock in the story. Every major tech breakthrough drags an entire supporting cast along with it, and the investors who map that out early are usually the ones who benefit the most. This is my personal ranking, based on the research I've walked you through. Your situation and risk tolerance might be completely different. Always do your own homework before putting any money to work. If this breakdown helped you see the bigger picture, hit like, subscribe with notifications on so you don't miss the next one, and drop a comment with which of these 4 you're watching closest. And if you want a visual summary file for this video, join the Wealth Signal Telegram channel. Link is in the description. Next time, we're going deeper into one name from this list that I think deserves its own full breakdown. I'm Alex Carter, and I'll see you in the next one.